You and I have talked about this, and I'm going to say it again while we're now here in person. As someone who is so thankful that my father, who passed away when he was 52, made the decision to take out a basic term life policy.
Even that term part.
Term life policy, had he not done that, given the circumstances financially where him and my mother were at when he passed away, I don't know what she would have done. And so, yeah, I think when you're on the other side of the benefit that insurance provides, it always, in my opinion, will change the way that you look at it. And so it's been difficult for me over the years to hear the negativity about the insurance industry when you're someone that has been a benefit when it works and when it's needed.
Right. Well, the reason why there's so much negativity, if you go on the internet right now, okay, there's a marketing ploy, and I am so against it. And I'm going to say this for anybody who's listening to us. If you see somebody who comes across and says, infinite banking system, divorce the IRS, do yourself a favor. Run. Run. Okay? IUL makes a lot of sense, but it's not for everybody. VUL makes sense, but it's not for everybody. Whole life makes sense, but it's not for everybody. Term, it's for everybody. It's like having auto insurance. If you don't have it, you're not protected. The question is, do you want to rent your apartment, buy the house, or have an RV that you're renting the land on? And that's really the difference in the coverage. Term insurance is you're renting an apartment every single month. Cost will always go up. You buy a house. You bought the house in 1990. You bought the mortgage. You're 5 years now from finishing off a 30-year mortgage. Has your cost of your mortgage gone up? No. Only if you decided to take home equity out and use another home equity line, but your house is paid off after 30 years. Same thing happens with whole life. You can do that with a VUL, you can do it with IUL, but usually those types of products are designed to be investment products where you fill them all the way up until the point, just like a carafe of water. If I filled up my carafe and it poured over, that's a problem. I got to clean it all up. Well, that's the same thing in an insurance policy. If you overfill the carafe, you have to pay taxes. That's really what it is about. And Susie doesn't understand that. Susie is thinking, all we're talking about is the expense. But if I bought, would she tell you to do a 30-year mortgage or a 15-year mortgage? Why would she tell you to buy the house versus rent the house? She would tell you to buy the house. You get a deduction for buying the house. You own an asset. Well, that's why you buy a life insurance. That's why you buy cash value life insurance. It does more things than just protect you for that short period of time. And, oh, by the way, your life insurance grows the same way your house equity does, tax deferred. And when you sell your house and buy another house, do you ever pay taxes on it? No, you can roll it over. You can do a 1031 exchange. Anybody who owns a house knows that. But if you sell the house and don't buy another one, you get $250,000 tax-free, right, on the capital gains.
Yep.
These are things average people understand that type of stuff.
Yeah.
They don't understand financial instruments. They don't understand an annuity. They don't understand the costs. They don't understand why there's a state premium tax, which we're in the state of Kentucky, by the way, has some of the highest state premium taxes, by the way, in a life insurance policy.
Is that what you thought about when you landed here today? Like your brain works like that? You land in a state, you think about like the taxes and the implications and the retirement tools and all that stuff. I can only imagine that being what goes on in your head.
Well, what's interesting is that the state of Kentucky, okay, has the same business owners, farmers, horses, thoroughbreds. It's family-run businesses. That family wealth is so important. But do you know how family wealth is really, really, really created? They start investing in things. Some of the biggest companies that I've ever worked with were a family business that started out as immigrants. They moved to Chicago, and they would sell their wares going down the Mississippi. When they got to the bottom of the Mississippi, they had all this cash. They go, okay, what do we do? Well, let's buy some land. So they buy the land, go back to Chicago, take the money that they had, buy enough goods so that they could do the trip again. Then once they were done doing this, about 5 or 6 times. Now they had the land. They said, we're going to open a convenience store. The convenience store is sitting there. Now they have the convenience store in this nice plot of land, and they start doing payday loans. They become a bank. They're now the largest bank in the Mississippi Delta. All started by a family, specifically a traveling Jewish salesman who ended up in the Mississippi Delta, that now is one of the strongest financial institutions in Mississippi.